Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, November 4th, 2025, and here is everything you need to know as the markets open for today. US markets wrapped up Monday's session with mixed results as AI stocks took center stage. The Nasdaq Composite gained almost 0.5% to close at 23,835, while the S&P 500 inched up 0.2% to close at 6,852. However, the Dow Jones Industrial Average bucked the trend, dropping 226 points or 0.5% to close at 47,337. The star of the day was Amazon, which surged 4% to hit a fresh record high after announcing a massive $38 billion 7-year cloud computing deal with OpenAI. This partnership gives the ChatGPT maker access to hundreds of thousands of Nvidia processors through Amazon Web Services. Speaking of Nvidia, its stock climbed over 2% after receiving export permits to ship chips to the United Arab Emirates, adding fuel to the AI rally. On the flip side, Kimberly-Clark plunged nearly 15% after announcing plans to acquire Tylenol maker Kenvue for over $40 billion. Kenvue shares, however, jumped 14% on the news. Healthcare giants United Health and Merck also weighed on the Dow, falling 2.3% and 4.1% respectively. In after-hours trading, Palantir Technology shares rose nearly 1% after the AI analytics firm beat Wall Street's third-quarter estimates and issued strong guidance, driven by robust growth in its AI segment. Market breadth remained weak though, with over 300 stocks in the S&P 500 closing lower despite the index's modest gains. Indian ADRs traded mixed overnight. On the banking front, HDFC Bank ADR gained 0.77% while ICICI Bank ADR added 0.58%, signaling positive sentiment for private banks. However, IT ADRs faced headwinds, with Infosys falling nearly 1% and Wipro declining 0.76%, reflecting broader weakness in US tech stocks. The key takeaway for Indian investors is that while banking counters showed resilience, IT stocks may face pressure at the opening bell, tracking their ADR performance and the mixed sentiment in US technology shares. Asian markets opened Tuesday on a cautious note, diverging from Wall Street's tech-fueled rally. Japan's Nikkei fell 0.4% after returning from a long weekend holiday, while South Korea's Kospi dropped 0.3%. Australia's S&P ASX 200 declined nearly 0.4%, ahead of the Reserve Bank of Australia's policy decision, where rates are expected to remain unchanged. Hong Kong's Hang Seng futures pointed to a weaker opening near 26,134, down from Monday's close of 26,158. On Monday itself, Chinese markets had shown strength with the Shanghai Composite gaining 0.6% and the Hang Seng climbing 1%. Looking at GIFT Nifty, the index is currently trading around 25,890, indicating a steady to marginally positive opening for Indian markets. This suggests we might see the Nifty opening around the 25,800 level, roughly flat to slightly higher from Monday's close of 25,763. The cautious Asian tone reflects profit booking after recent gains and investors awaiting fresh economic cues before making big bets. On the geopolitical front, US-India trade tensions remain in focus. India now faces higher US tariffs at 50% compared to China's 47%, after President Trump softened his stance on Beijing following their recent meeting in South Korea. This tariff disparity has created concerns about India's export competitiveness, especially as Trump continues to pressure New Delhi over Russian oil purchases. On a positive note, the US and India signed a 10-year framework for major defense partnership on Friday, aimed at enhancing coordination and technology cooperation. This shows the strategic relationship remains strong despite trade frictions. Oil markets saw modest gains with WTI crude rising to around $61 per barrel, after OPEC Plus announced it would pause production increases for the first quarter of 2026, easing oversupply concerns. Russian supply risks from US sanctions and Ukrainian attacks on oil infrastructure are also supporting prices. China's decision to end tax rebates on gold sales has impacted precious metal demand, contributing to some recent softness in gold and silver prices globally. Domestic markets ended Monday modestly higher, with the Nifty up 16 basis points at 25,763, and the Sensex gaining just 5 basis points at 83,978. PSU banks and pharma stocks led the gains, rising 1 to 2%, while IT and FMCG saw minor profit booking. Broader markets continued to outperform, with the mid-cap index up 0.62% and the small-cap gaining 0.71%. Market breadth was positive with over 2,100 stocks advancing on the BSE. FII data shows foreign investors sold 1,884 crore rupees on November 3rd, marking continued selling pressure for the month. However, DII stepped up with buying of 3,516 crore rupees, absorbing the foreign outflows and providing critical market support. On the corporate front, important earnings releases today include State Bank of India, Mahindra and Mahindra, Adani Ports, Interglobe Aviation and Indian Hotels. The market will closely watch SBI's asset quality and loan growth numbers for cues on the banking sector. Meanwhile, the Grow IPO opened for subscription today with a price band of 95 to 100 rupees per share. The 6,632 crore offering has generated strong interest from anchor investors who subscribed to nearly 3,000 crore rupees worth of shares. From a technical standpoint, the Nifty is consolidating after its recent rally to 26,100. On Monday, the index formed a small bullish candle with support holding at 25,645 and resistance capped at 25,800. For today's session, immediate support for Nifty lies at 25,700, followed by stronger support at 25,650 and 25,600. The index needs to hold above 25,600 to maintain its positive momentum. On the upside, resistance is placed at 25,800, 25,900, and the recent swing high of 26,100. The overall setup suggests range-bound trading with a cautiously positive bias, as long as support zones hold firm. Gold prices in international markets traded around $4,015 per ounce on Monday, gaining slightly but remaining well off recent highs near $4,200. The precious metal has corrected from peak levels due to China ending tax rebates on gold sales, which dampened demand in the world's largest gold market. Despite the pullback, gold remains up over 45% year to date. Silver followed a similar pattern, trading around $49 per ounce. Like gold, silver has pulled back from recent highs near $52, but continues to benefit from industrial demand and safe haven flows. Given today's setup, traders should adopt a cautious yet opportunistic approach. The Nifty's consolidation phase between 25,700 and 26,100 is likely to continue unless we see a decisive breakout. Watch the opening carefully. If Gift Nifty's positive indication sustains, we could see early strength, but be mindful of profit booking at higher levels. Bank Nifty looks relatively stronger with PSU banks providing support. Consider stock-specific opportunities in banking, especially PSU names that reported solid earnings. On the flip side, IT stocks may face pressure tracking weak ADR performance, so be cautious about fresh longs in that space. With multiple heavyweight earnings today, including SBI and Mahindra, volatility could pick up in the afternoon session. It's wise to avoid aggressive positions ahead of these announcements unless you have a clear directional view. For options traders, the weekly Nifty expiry today could add to intraday swings, so maintain disciplined stop losses and don't chase moves. Focus on quality setups and remember, preservation of capital is as important as making profits. Stay tuned for the evening wrap where we'll break down how the day unfolded and what to expect for Wednesday's session. And as always, send in your questions and stock queries. We love hearing from you. Trade safe and trade smart. Have a profitable day ahead.